All right, boys, weekly market outlook today, and we are going to be analyzing, as usual, the euro, the pound, and the DXY. Without further ado, let's dive the F into it. So, we always start off in the monthly time frame to show you guys what the higher time frames are doing. Once you understand the higher time frames, you will understand the lower time frames with more precision. So, Euro USD, we are currently at this point in this monthly candle. We have 15 days left, 13 hours, and we are printing very, very bullish. Last week was CPI week, and it was an absolute shit show. I'm not gonna lie. This was the volume of this candle, so very, very small. But essentially what I'm going to be expecting coming into this week is a continuation of bullishness. Why? Because I'm not going to be the motherfucker calling the high of the move. I simply want to follow the trend as price pushes up. Another thing that I will quickly show you is the retail sentiment right now. You can use this on your Forex Factory, is currently super bearish. Look at Euro USD, right? So as of right now, we have literally 78% of traders. You guys can't see it. Yeah, there you go. You can see it right here. 78% of traders are currently short and 22% of traders are long. If you're a bank right now, you need liquidity to position your shorts. And if everyone is short, there's not enough positions for you to go short, which means that it's still likely that price is going to push higher in order for price to mitigate a specific zone where the banks will position their orders, and then we will see lower prices. So as of right now, I'm still expecting bullishness because everyone's short. So you go against what everyone is doing and you simply follow the momentum. Don't short necessarily when price has been displacing, creating this massive move up and just expanding, right? You don't have to be the guy calling the top of the move. Just be the guy that follows the momentum and makes some fucking money, all right? So let's dive straight into it, just taking this off quickly. The daily time frame. What I am currently expecting as of right now, as I've just explained, is continuous bullishness into this first target right into here. What I've also marked out is this daily order block right here, which is just below the monthly gap. Do I expect this zone to be of much use? Probably not, because if we're going to push up into here, it's very likely that we're going to close this monthly gap, which I just showed to you on the monthly time frame right here. So this is a monthly order block. This zone caused price to break structure below this low, and if price mitigates it, we could potentially see a push lower from this zone. So let's go down to the 4-hour time frame now. This is where things get a bit nerdy and technical, but this is exactly what we love, us ICT traders, right? Okay, so first things first. We came down into this zone right here. We mitigated this 4-hour order block, and now we have started displacing away from it. And the only way to notice this is because of the fair value gap printed right down into here and the bullishness of this move, right? We came into the zone and now we're starting to reject it. Simple as that. I'm not trying to be a genius right now, but this is literally what price has done. It's simple. Higher low, higher high, higher low, higher high, higher low, and now we could potentially see this next higher high and this push up, right? Along with that, we've had a sweep of liquidity, which is a perfect sign for our preparation for the next move up, right? So in order for me to now start looking for shorts, I want one of two things: price to trade above this high, potentially take a short-term short, or price to body close below this low with momentum, indicating that we're going to target these lows and potentially create a larger time frame pullback. But as of right now, this is not what I'm looking for. What I'm looking for is continued bullish momentum, right? That's it. I'm going to go the 15-minute time frame in tomorrow's daily market outlook video. As always, the weekly market outlook is short, concise, and precise, where we go over what the higher time frames are doing. If you're a beginner trader, I hope this is helping you, because I just want you to understand truly that once you master the higher time frames, the lower time frames will be much easier. If you're jumping onto your charts and going straight to the 1-minute time frame without an edge and without understanding what the higher time frames are doing, my personal opinion is you are a professional gambler. All right, so that's it for Euro USD, right? High low, high high, high low, high high, higher low, expectation of now seeing this high go and get a new high high. So this is also a market maker model. If you guys trade MMXM, it's very clear. Original consolidation, and then now the phases to the expansion up. Let's go to Euro USD monthly time frame. Same thing. So we still have a bullish candle. It says no lower wick. That's just a sign of how bullish price has been recently. We have this monthly zone, which had already mitigated on November 2024 and created a push lower, trading below this low. We didn't get a body candle closure below this low, but we did trade below this low. So now what I would like to see is price start, well, let me just go to the lower time frames to explain this to you. What we want to see in line with the euro is potentially still more bullishness. Obviously, the main targets for price after the bullishness and the pullback will be this weekly breaker block and this weekly order block right into here. We have so many stacked PDRAs, right? We have this fair value gap, we have this weekly breaker and this weekly demand zone. So when price comes down back into here, we'll potentially get a long opportunity. Let's drop down to the daily time frame on GBP USD. So as you can see, the daily time frame is not super clear right now. We have this low, this high. This is our current dealing range of 127 pips. This is the previous weekly high. This is the previous weekly low. What price did last week is it traded into this fair value gap and then started expanding higher. And I'm still expecting expansion higher. Let's go back to the Forex sentiment. Right here, we have 78% short as well on GBP USD. So retail is super short. Don't trade along with retail, trade against retail and go for longs. This is my first current target for price, right up into here, right? This is the potential area where we could get a sweep and then a nice pullback. And then I obviously have this fair value gap marked out for later, not for now. We don't have to go into that just yet. So that's it. Let's go down to the 4-hour time frame. What we can see on the 4-hour time frame is we've had a nice sweep of this low right into here. So a sweep of liquidity. And now what we want to see is potential bullishness coming in to the next week. We could also see price trickle down, come into this 4-hour extreme zone, and then get the longs. So something like this, long from here, target the high, and make some motherfucking money, bitch. You know what I'm saying? So this is essentially my analysis for the pound as well. So we're trading the same. So GBP USD and Euro USD are both correlated assets, opposite to the DXY, and the DXY will be the next thing that we'll analyze because this allows us to understand what the euro and the pound are going to do. Obviously, same thing, higher time frame, there's more weight on the higher time frame, the lower time frame, there's less weight that we can attribute to it. So DXY have mitigated this monthly BPR. Let's go down to the weekly time frame. We have swept this low right here. We have displaced lower, waiting for a pullback. However, okay, we still have not mitigated this weekly zone down here. We got very close. We got very, very close. Let me zoom into price for you guys. We got super close, but we did not mitigate it. So I'm keeping that in mind. Doesn't mean that price has to mitigate that zone before seeing the pullback. But if we're going to be bearish coming into the next week, this could be a nice zone to long from, right? Let's go down to the daily time frame now. Daily time frame. This is just going to be the new week opening gap. If everyone is short on the pound and the euro, everyone is long currently on this, and this is why there's nothing to say on the daily time frame. I'm going to explain the 4-hour time frame in detail. This is where the nerds will love this part, me included. I'm a total fucking nerd. Okay, so what price did right now is it swept this high right here. We have swept this 4-hour liquidity point. And then we've had this massive displacement lower, leaving this order block right here. So 4-hour text, leaving this order block right here, and this 4-hour gap, and this 4-hour BPR, which I will simply mark out like this in red. So we have a 4-hour BPR, 4-hour order block that swept liquidity and mitigated the consequent encroachment of this fair value gap right into here, right? So if you look at last week's video, what I was saying was I would like to see price body close above this high before seeing the pullback, but what price did is it simply swept it, created this candle, swept it again, and now we're getting bearish momentum. So I'm going to be following the bearish momentum. We have nice, clean, equal lows down here in the bottom and a market structure shift. So I'm keeping things simple and I'll be looking for shorts on the DXY. So that's basically it, guys. Tomorrow will be a very important video in my opinion, because I do have a 15-minute setup that is setting up pretty clearly, and I'll be looking to take longs into this high and potentially these highs. But if there's one thing that I want you to take away from this video, it is look at the higher time frames, and this is why I'm purposely not going down to the 15-minute time frame, because we frame our week on the higher time frames, right? I'm also going to quickly go over the Forex Factory because this is the other thing that allows me to trade, the frame my week, right? We have the higher time frames and then the Forex Factory. So on Monday, we have core retail sales at 8:30 a.m., which means that it'll probably be best to wait for 8:30 a.m. news and then start trading if there will be any opportunities, right? But it'll wait for the storm and then act when everything is calm and every trader got stop lost and blowed their account, okay? Tuesday, we have no news. So Tuesday, no news would usually be a pretty good trading day in my opinion. However, the following day is FOMC, and FOMC, I'm not going to be trading, obviously. I don't trade FOMC. The next time I trade FOMC, NFP, or CPI, I'm doing 250, I think it was 500 push-ups live or something. Anyways, I'm doing a challenge, a push-up challenge live, right? But basically what I want to say is the day before FOMC is also known to be a lower probability day. So if I will be trading on FOMC, I'll be risking 0.5% and not 1% just because of the probabilities. In my data as well, I've been known to take more losses on the day before FOMC and on FOMC than any other random day without high impact news or before high impact news. If you think on an institutional level, all right, if you're a hedge fund and you manage hundreds of millions of dollars, what would be the best thing to do when Tuesday, March the 18th arrives? You have FOMC the following day. Are you going to position yourself long and short or whatever on any asset before FOMC, this massive volatility move affects the markets? Probably not. You're probably going to be conservative, calm, and wait for the storm to pass once again post FOMC in order to position yourself. FOMC gives very key data, key information on what the dollar is doing. So you want to wait to see what the dollar and what the Fed is saying in order to position yourself. I've repeated that a million times now, position yourself. But anyways, it's key. Thursday, we have a shit ton of news. We have 3 a.m. pound news, we have 8 a.m. news, lots and lots of pound news, and then 8:30 a.m. unemployment claims. So this is all just a bunch of pound news, which probably means the euro will be tradable. Again, probably best to wait for 8:30. And then Friday is a no news Friday, which could go either way. It could be the highest probability day of the week, or it could just be a terrible trading day. That is it for today's video, and I will see you guys in the Monday market outlook. Make sure to join the Discord where I post my daily and session analysis, because sometimes I make a video of my daily market outlook and then it changes up. So Discord link in the bio. Peace.